Things are starting to get heated in D.C., and of course, all of this is coming down to one thing, and that is the Clarity Act. Odds are skyrocketing. Today, we'll break it down for you. Let's just get right into it. I do want to thank our sponsor today, and that is Tangem. This is where you guys can get into self-custody. If you're brand new to crypto, this is one of the first steps you should take, which is bringing some of your tokens off of centralized exchanges and actually putting them into your own self-custody wallets. They're hardware wallets that work like a little credit card with your phone, whether you're Android or Apple, does not matter. This is one of the easiest wallets to set up. You will feel very safe. You'll sleep well at night. And of course, use our link down below. It's going to give you a couple of discounts to get going and get started on your self-custody journey. It's a big one. Let's go over and kick this off with some things that are happening not only in DC, but also around the big line in the sand, which is really boiling down to the banks versus crypto when it comes to stablecoin yields. Well, this is Bernie Moreno talking about this very issue at the most recent World Liberty Finance Conference. Take a look.
What is the status of the market structure regulation that you famously blocked from passing?
I wouldn't say we blocked it.
Some critics would say you're just trying to protect your business.
Mm-hmm. Look, the role of the United States government or any government is not to protect incumbency or business models that are eventually going to be replaced.
Who's going to be replaced?
Well, look, ask Sears how Amazon worked out for them. Ask Blockbuster how Netflix worked out for them. Our job isn't to protect business models that are just not working. Young people don't like our current financial system. It's going to be replaced. We want it to happen here in America.
Were you surprised? What was your reaction when he after he's obviously been so involved in this and was so deep on it, and then came out against the version of the bill?
Well, look, I had concerns about the bill. We got hung up on the issue of rewards on stablecoins, which is really, in my mind, really shouldn't be part of this equation.
Wait, can we just explain this? Like, why people should care about this?
Well, unless you own a bank, you probably shouldn't care. Because if you're an American consumer, what it means is that the cash that you hold, you're going to have competition to pay you more interest. But we're going to get this bill across the finish line. But I would say
when?
Hopefully by April. Hopefully by April.
And I feel confident they'll get something done.
Is it moving forward with these rewards in place for stablecoin?
Yes, there's a small list of remaining open items. If a compromise can be found, this will get to the president's desk for a signature in a few months.
I say, because if you don't by the midterms and then the House goes Democrat, then what happens to it?
Well, the House isn't going to go Democrat, neither is the Senate.
Okay, well, there's Bernie Moreno talking about that right there. You have Brian Armstrong right there on his side. They're kind of talking in tandem about protecting rewards. So we wanted to get an update on what's happening in D.C. We thought we'd bring in Miller Whitehouse-Levine, who is head of the Solana Policy Institute. Great to have you.
Oh, thank you for having me.
So, Miller, let's get into a few points right now. The Clarity Act has skyrocketed in the probability. I'm looking at the poly market right there. Jumps dramatically over just the last 24 hours. After it went up from 55% last week, has now skyrocketed to 76%. What is going on in D.C. that would make that move so quickly, at least in the poly market? What are you hearing?
Well, I think it's reflective of the immense amount of progress the White House has been making with the banks and the crypto lobby on trying to reach some sort of productive conclusion to this stablecoin yield reward issue and disagreement. Of course, to Senator Moreno's point, I think folks, and we agree in industry, think that this was settled last year when the Genius Act passed, and the banks should have made their case then and not caused us problems on the Clarity Act this year. But we are where we are, and I think the White House's total commitment to getting this issue resolved has been the critical factor, and it will remain the critical factor. If anyone could get it done, it's them. And so I think their engagement, there were some rumors yesterday that they may have another meeting tomorrow at the White House between the banks and the crypto folks with an interest in the rewards issue. So I think as long as the White House remains engaged and committed to getting this done, actively trying to facilitate resolution, folks are rightly hopeful that the bill will pass.
Yeah. Why haven't we seen Trump just come out and publicly say, hey, we should really do this? I mean, it would be right within his bailiwick of saying, let's get more money to the American people, especially in this affordability crisis that we're facing. What do you think is holding the card back from doing that?
I completely agree. You know, at the end of the day, what the banks are trying to prevent is the broader wider sharing of yield to consumers. It's certainly in every consumer's interest for rewards to be shared with them, and the government shouldn't play a part in preventing that. I think the president's been certainly supportive of getting a deal done here. I think that just in Davos a few weeks ago, he called for the bill to get passed in response to a reporter question. I think last week in the Oval Office, he said he looked forward to getting the bill done. So my impression is the president's pretty active, and he certainly has been using the bully pulpit to press for a deal on this issue. And I do think to the extent, there is intransigence on either side of this debate that we could see, the president get more directly active.
You mentioned that there might be another meeting with the banks. This tells me that at least it appears there could be some concessions being made by one side or both right now. If you were a polymarket bet man, where would you think this falls? Do you think the banks are conceding some issues around stablecoin yields, or do you think crypto is conceding? Or have they come to an alignment that maybe allows both to win?
Well, I don't think that alignment has been found. It's certainly the goal. I think the document that came from the banks, as reported, from last week's White House meeting, I think that was last week, but a lot's been going on. They, I think, got further away from any position they had previously expounded on the issue, and we're going in the opposite direction. I think that list of items was effectively a prohibition on direct or indirect rewards of any variety to anyone. And that is certainly not where the banks were even in January. So I think that document didn't evidence much open-mindedness or desire to reach a productive conclusion. And so I think the hope is that this week that will change.
All right, so if that's the case, they were moving kind of the opposite direction. You have the White House putting a lot of pressure on it. Then, of course, we see the situation right now, which has really been targeting this March 1st deadline that President Trump put on Congress to get this done. And, of course, you now potentially have the banks kind of either pretending to compromise, or is it just a lot of pressure coming in from the Trump administration that's saying, this is the way forward, guys, and you have to follow the rules here?
Yeah, my guess is, how this ends is the White House is going to make a policy decision that neither side is going to be happy with. I think it's one of those, the adage that if everyone's unhappy, then you probably have reached a good conclusion. And I think that's what is going to happen here. I think that, from the bank side, it is difficult to, decline to engage with the White House in a productive way. And so I think it's been extraordinarily helpful for Patrick Witt and the White House to remain, a convening force here, because it's the only way to get folks to the table.
Do you think they're going to miss the March 1st? Because Moreno was talking about April. That would be another 30 days in the hopper of trying to get this done. You've got the skyrocketing odds right now on Polymarket. It looks to me like something's going on that hasn't been revealed to the market just yet. Somebody knows something. So do you feel like March 1st is even potentially in the cards? Here we are 12 days out, or 10 days out.
I think we could definitely see a stablecoin reward yield deal before the end of March. And I think that was, before March. Okay. And I think that was the deadline that the White House had set for stablecoin reward deal. I think that to the extent a reward and yield deal is reached, and to your point, maybe it has been reached and hasn't been shared with the world yet, that is going to be a starting gun, or perhaps more of a closing gun for the broader market structure effort. Yeah. This yield reward issue has metastasized into such a nightmare that I think to the extent a deal is reached on this issue, then the bill is moving and, it's 100% happening, and stay out of the way of the freight train type thing. Yeah. So I think to the extent yield and reward issue is resolved, there's going to be immense amount of momentum to get the broader bill done, because one thing is for sure, everyone can agree that no one wants to go through any of this again. So I think to the extent that is resolved, folks are going to be like, let's get her done.
Let's take it on, let's steelman a little bit and take a look at it. What happens if there is a concession, and whether it's crypto conceding and the banks possibly get some sort of deal on banning yields? My next question is how does this affect DeFi? Because obviously DeFi will be the area where most people will flock to for yields now because you can't get them in your exchange potentially. What kind of impact do you think that would have on banks seeing that start to occur?
Well, I think, TradFi and banks, I think one of the broader stories of 2025 and this administration beyond it being, such an amazingly favorable policy environment is TradFi and the banks have arrived. Even last year in summer on Genius and Clarity passing through the House, they, had been nowhere to be found. And they certainly hadn't engaged prior to 2025 and, hadn't took it seriously. I think that the bank's engagement, is to me extremely validating because they spent the prior 8 years, saying all of this is fake and doesn't matter. And now it's an existential threat to the entire banking sector if, you take what they're saying at face value. And the same will be true for DeFi in their worldview. So I think that the banks are floundering a bit here and are trying to figure out their pivot to crypto and public blockchains. I certainly welcome it, and I think the folks that can get ahead of the curve and skate to where the puck is going, so to speak, are going to be rewarded long term. But of course, there are going to be folks that try to use the existing regulatory regime to prevent competition from arising. And I think that's, the gist of what we're seeing here.
Yeah. You mentioned that this is going to create kind of a starting gun approach. One of the things that potentially could have a big impact is synthetic stocks. Solana, of course, being one of the cornerstones of where this activity is taking place right now. But we could see this maybe rolling into a KYC AML situation. My question is, if we get into a KYC situation, how much of an impact do you think that would have on something like an X stocks or any of those synthetic stock platforms?
Yeah, I think it depends on which markets we're talking about here. So I think for like crypto spot markets and regular trading, we're certainly a long way off from any KYC AML requirements and are actively advocating against it. On the security side, it's going to be more complicated, and everyone should prepare for that for a variety of reasons. Number one, they are regulated markets, and historically, the Bank Secrecy Act has applied to intermediaries operating in the securities markets. Mm-hmm. I think that's going to stay consistent, and leaves the question as to what an intermediary is versus what DeFi is, which is how a lot of these conversations end or where a lot of these conversations lead to. So that's the first thing I'll say. The second is with respect to securities, or at least native securities on chain, which is the goal. Like we want the actual equity security on chain is the vision. The Securities Acts have separate disclosure requirements that are unrelated to AML CFT issues. So, for example, major holders of U.S. equity securities for completely different reasons have to be disclosed, and their major trading has to be disclosed, et cetera. I think the threshold is 5%. It's incompatible with a pseudonymous system, and I think is one of the core challenges that the SEC is actively working through. They, I think, are trying to retain the permissionless aspect of DeFi protocols, public blockchains, while vindicating the disclosure obligations that are required in U.S. securities markets, which I think will require some sort of identity. I think long-term, my personal view is that the Bank Secrecy Act is unconstitutional and it's a dying regime that doesn't work. And, it's ready for the ash heap of history, but that's a long-term battle, Paul.
Yeah, it is. Well, it's one that I think right now we're at a very pivotal point, because this is most likely
100%.
it's going to open up all kinds of issues that are immediately going to go right into the Bank Secrecy Act, and it's going to cause rub across this issue that's been out there for quite some time. So I don't know if
you're exactly right. Yep.
Yeah. If we deal with that, though, do you think there will be an interim where people that maybe already hold a lot of these synthetics right now that would be forced to either sell and rebuy, or how do you think that would play out on somebody that's already in the market?
Since they're already in the market, it's all offshore, and so they are just operating under a different framework. It's offshore U.S. securities, so don't really have to think about it. So my expectation is that they will remain unaffected. What the SEC is going to unlock is U.S. persons trading U.S. securities on public blockchains in DeFi in the U.S. That's greenfield that we've never had before, and a year ago couldn't imagine having. So I think it's what they're doing is making the pie bigger versus I think preventing anyone from experimenting the way they are today.
What do you make of the pre-stocks angle? We've seen now Robinhood moving into this space with Robinhood Ventures, obviously pre-stocks right here. These are being able to invest in companies before they go public. The idea is that, you look at about that. And first of all, do you think this is going to be a major move? Do you think the SEC is going to get involved in this and say, no, we can't get into this kind of situation. This should be a security.
Well, I think they are securities, and I think those folks don't deny that they're securities. The SEC is trying to create a framework where it's saying it's okay to be a security, actually, because we're going to create a framework for you that is compatible with trading and activities on public blockchains. So being a security is no longer a death sentence. It's the U.S. capital markets. We love securities more than anything. And to the extent that you can issue a equity security on a public blockchain and be in compliance, that's an amazing outcome for everyone. Yeah. So I think the pre-securities thing is an interesting one, though, because it's more broadly aligned with the current SEC's philosophy, I think, around freeing capital and freeing access to investments. I think this commission with Chairman Atkins and Commissioners Peirce and Ueda have, I think, the lack of participation in public markets among U.S. companies over the last 15 years, I think, has been a tragic outcome of overregulation in their minds. I think it was 2019 is the last data I saw, but more capital was raised via private exempt securities offerings than public IPOs. Yeah. That is a situation that's not just terrible for companies and folks trying to raise money to start new innovative businesses, but also for anyone that's not already rich and wealthy and therefore has access to private investments. You have to have $1 million in liquid assets outside of your primary home and make over $250K a year to access the private markets in the US right now. So, that's, I think, an intolerable situation, and I think the commission agrees. So I expect that they'll be broadly supportive of initiatives like this that provide access or liquidity to early stage employees, companies that have rewarded employees with stock equity. Yeah. And I think, is broadly aligned with their agenda of freeing capital and freeing access to investment opportunities for U.S. citizens.
Well, and Paul has talked about this, is that when you look at the accredited investor situation, what you're referencing there right now, that would, to your point, I think it would really open up the opportunity, not only for individuals to be able to buy in to, these kinds of opportunities, but I think it's going to open up the opportunities for companies to actually accelerate into the market, to your point. So very big deal. I want to get over to another situation that also is a big trend, and that is prediction markets. You've got Mike Seeley right here, of course, coming in from the CFTC. He says, hey, we filed this brief. This is the Ninth Circuit Court. This is basically defending the CFTC's authority to regulate the prediction markets. But at the same time, you've got states that are out there trying to pull a little bit of a push-pull against prediction markets. Do you think the CFTC is going to go full on against these states that try to basically buck their current situation?
I definitely think so. I think that's exactly what Mike did yesterday, or Chairman Seelig, excuse me. I think that was as guns a-blazing as it gets in the world of administrative law litigation. So they submitted a masterful brief last night, and I think the litigation around this issue, it's almost impossible to follow because there are so many cases that are moving so quickly. But it's surely signal that the CFTC and the new chairman has an extremely strong view that these assets or contracts, are within the existing jurisdiction of the CFTC and therefore preempted from state law and regulation. Yep. I expect this one to go to the Supreme Court, given the amount of litigation, the fact that states are parties to this litigation, and now that a federal agency is involved. Yeah. It seems like that's where it's heading.
For sure. I'm looking at the CFT's Innovation Advisory and Committee members. Solana, of course, is down here on it as well. So we've got Solana Labs with Toli on there. I'm kind of curious, what kind of matters do you think would pertain to Solana, from an advisory role? How do you see that potentially structuring under the CFTC with all these advisors in here? Because there's a lot of different people in here from different chains, et cetera. What is Solana's big take here?
That's exactly right. And there's a lot of different kinds of businesses or, software developers on that list. And I think it's reflective of the fact that the participation in futures markets in 2026 is, quite varied. And the venues in which that activity is happening has, exploded in a Cambrian style experimentation over the last few years. You have CME, as trad as it gets on that advisory council because futures are trading there. And you also have Toli on there because folks have built prediction markets and all sorts of, derivatives or assets within the CFTC's jurisdiction on Solana. So I think that, broadly, the vision of internet capital markets requires all of these different things to eventually exist on chain. It's never been possible to offer derivatives in a compliant way or futures in a compliant way to U.S. persons. And so the hope is the CFTC is going to make that possible across a whole host of venues. If you would like to go use a protocol on chain using your self-hosted wallet, here's the pathway to do that. If you'd like to go to CME, enjoy, go at it. So I think it's reflective of the fact that the CFTC is not going to be picking winners and losers here via regulatory requirements. I think their goal is to create a level playing field and let the market decide.
I'm looking at some of the concessions that seem to have been made during the structure of building the Clarity plan, I think, in front of Congress. One of the big ones that kind of came on was the whole idea around credit card routing. And for many of you guys may not be aware that the idea was to offer a third option. Third option could have been easily crypto. I look at Solana Pay and I think, man, this was a missed opportunity of getting crypto maybe into retail payments for the first time. Do you think this is maybe going to take some more time to be able to get something like this enacted again to open up crypto into retail payments?
I think the big holdup there is not going to be on these market structure issues. It's going to be on tax issues. Today, for example, you have every time you buy and sell a stablecoin or use a stablecoin to buy and sell something, you have some minuscule tax obligation under current law. For example, if your stablecoin was $0.9999 dollars at the time that you bought it, and then you sell it for a cent and 0.0001 cents, you have technically a reportable appreciation of wealth that you have to pay taxes on to the U.S. Treasury. That is just obviously not a viable tax situation for stablecoins and a host of other crypto assets. So I think that that's going to be the key holdup. I think, in my view of any player in traditional markets broadly, the payments networks, MasterCard and Visa, have been by far the most forward-leaning on crypto issues. Visa, has a gentleman, Guy Sheffield, who's been leading a team over there for years and years and years. So I think the payments networks are ready. I don't think it's going to be these regulatory issues outside of tax that are going to be the big holdup. I think it's the tax treatment.
Okay, well, we'll see how that plays out, because that's, according to everybody I've talked to in D.C., that's kind of the next shoe to drop, is the taxing and dealing with tax, I think, law around where crypto is going to be going. And, of course, all these new instruments that are essentially going to be developed coming out of Market Clarity. I want to go to our speed round with you, and this is just quick questions on where you land on different issues. This is the first one. yield compromise will be reached by March 1st. I think you answered that earlier. You think it might happen. I'm kind of on your side. I think we might see something. It may not get through, but I think we'll have the indicator by March 1st that yes, it's going to happen. All right, so this is going to come fast. Banks will try to ban phantom cash rewards. That's the alternative if they do create some sort of weirdness there. What do you think?
They're going to try to ban everything, so I'm a yes.
Okay. So, well, at least we're thinking
position.
the same way on the revenue sharing tokens. What about that? Jupiter, Meteora, Camino. Will those have, do you think those are going to get SEC exemption? Okay. I'm with you on this. I like it. I think they are going to get exemption. And then if you look at Clarity Act right now tackling privacy issues, do you think that's going to happen at all?
No.
Okay. We're way away from privacy.
Yeah, I think,
unfortunately.
I think that everyone's hope is to collapse the number of issues being addressed in market structure as opposed to opening new ones. Like again, 4 or 5 months ago, yield rewards wasn't even a topic of conversation in the context of market structure, and here we are.
Yeah, exactly. If a bad bill passes, industry leaders like Mr. Armstrong will pretend to like it. Do you think that will be the case? What do you think?
I think my answer to this one is yes. I think that the reaction to Coinbase has been pretty brutal. So I don't expect it.
World Liberty Forum event should have happened after Clarity, because I think a lot of people are worrying, hey, this just draws the awareness right back to the Trump administration. And if this was only after Clarity, Congress would at least feel better about getting this through. What do you think?
Yes.
Yeah, I'm with you. Okay. Well, we got no side spots here. We got to disagree on something. Banks will attend the Rose Garden signing of this.
I would love that. Obviously, I'm going to say yes on that one.
Okay, I'm going to say hell no.
Okay.
They're going to send the minions. The minions will attend. Jamie Dimon will not be there.
Right. That I agree with you there.
Okay, well, that's true. There you go. Hey, listen, this has been a good one. First of all, thanks for coming on today. We appreciate it, Miller. We'll definitely have you back as things get a little bit more heated in D.C., because this could open a lot of opportunity for Solana, being one of the major chains that could benefit from this. So thanks for coming in today. We appreciate it.
Exciting times. Thank you for having me.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.